Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to hit up Twitter, see what people are talking about, give you my financial opinions. We may look at some other information that we don't normally talk about on the channel. It'll be through TradingView. It'll be like construction stuff. And, keep in mind that the things that drive these recessions generally are the housing market. And if construction starts to peak and roll over, that could be a leading indicator that problems could be coming in the immediate future. We saw that rollover many times before recessions. So we'll look at some of that data together, see if it's rolling over, and see what we can glean from that information. Things when they do start to roll over, it's not going to be black and white. You're going to be living in a gray period for a period of time. What does that mean? Gray means some data looks good, some data looks bad, and it's turning. So some of the data is going to look worse first, and then others will lag behind it. And then eventually everything will roll over at some point. I'm not saying that we are at that point yet. I don't 100% know, just like everyone else. They don't know either. And if they claim to know, be careful of them. So we'll dive in here. We'll look at a bunch of different things, and I'll give you my financial opinions. And again, if you want to follow me at finding_finance and finding-value.com if you want to join our community. So Patrick, throwing up the 30-year yields. Just to let everybody know, yields are important because yields price assets differently. We were in a 40-year, basically, we'll just go over here. Historical 40-year channel confirmed breakout with possible continuation for 30-year yields. This is this long 40-year decline. And what that did is it pushed bonds and stocks higher for 40 straight years. That is a massive secular bull market in those two asset classes. And at the end of this asset class, this is what happens. You get all of these assets where the money piles into it based off of the market conditions of this 40-year decline in yields. So money has gone and piled into bonds and stocks at historical levels. And we can see that through the ratios that we look at on our charts. We can see that stocks are expensive to everything. This is what's causing that expensive movement in money flows in the market for 40 years. And what's happening is the 30-year yields, it's bottomed, capitulation bottom. This is where hopefully you refinanced your house, because this is like once in a blue moon, absolute best time to refinance of anyone that's alive. Now we're starting to break to the upside. And now we're breaking the pattern right here to the upside as well. So we could see another run higher in yields. Yields and oil are highly correlated. And what this is telling us is that we could see another bout of inflation. Potentially. And keep in mind that they have to release a lot of bonds, and that supply of bonds could increase yields, which is also going to be inflationary because they're going to need to raise a bunch of money for those to be successfully sold at a yield that is acceptable. I'll just say it in that way. But it looks like we're breaking to the upside again on the 30-year yields, and we've seen that in our daily technical analysis. This is from Housing Bubble Disrespecter. These are all the crash bros. 2021, I'll wait till the market crashes. 2022, I'll wait till the market crashes. 2023, I'll wait till the market crashes. There were people saying that we were going to crash in the housing market in 2020. All these people, they just continually say, market's going to crash, housing market's going to crash, housing market's going to crash. And one thing I'll say is, at the top of housing market crashes, you have inventory levels above 10 months of inventory. We are nowhere near that. And I'm not 100% sure that these guys, they might be wrong for 5 more years. They might be wrong for 7 more years. I don't know, however long it takes to get the inventory levels up to 10 plus months. You don't end a housing bubble with zero inventory. That's not how the markets work. If you think that's how it's going to work, I mean, good luck to you. Yes, prices have gone down to some degree. I agree. But I think the market's a lot more resilient, and the Federal Reserve is going to have to hold interest rates up for a long period of time. If they don't hold those interest rates up, for whatever reason it is, housing market's going to take off again. That's my take. Here's Patrick. He says, here is with 7-year rate of change, epic move brewing as the 1970s. So what he's got here is he's got the 10-year yield versus the S&P 500. You've got the 40-year downtrend channel that's broken to the upside. And if you look at the momentum, this is the 7-year rate of change. You can see a big move up here of higher momentum area in the 1970s. Silver, this is silver price, this dark line up here, went bonkers. Boom. We went into a very long-term downward motion to sideways, very low. It did a big double bottom. We broke that double bottom to the upside here, but that's in a larger, even bigger double bottom. And guys, what is coming is going to be epic. It's going to be epic for gold. It's going to be epic for silver, epic for uranium, and even oil and natural gas. The bigger, longer term outlook on all this stuff is epic. It is such a good setup. And this is why I'm saying this, all right? What generally happens is you come from a very high level, you dive down and you do a booty bottom, a booty bottom. So this is the one side here in the 80s, 90s, and 2000s. It came up and peaked in 2009, 2010, and then it did another bottom all the way down in 2020. We're coming on up, and we're going to get stuck here for a little bit just because we're at that resistance area. But the rate of change is moving to the upside. We've got our yields breaking to the upside, and we've got silver ready in launch mode here at any second. We've got gold sitting on top of its pattern, silver sitting on top of its broken trend lines. And they're just ready to launch, guys. Like, we are, I don't know how long away from this, months or weeks or 6 months. I don't know the time frame, all right? I honestly don't know. No one else knows for sure. But I can tell you all of the charts that I look at look so incredibly bullish that I just look at it and say, I want to buy more. 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 It'd be good if it went sideways for 6 more months, and you can buy 6 more months worth of whatever equities you want, or precious metals, or whatever tickles your fancy. But guys, it's here, and we're about to break. So this is good. This is really, really good. Good chart there. Here's another one. It says the 10-year yield versus SPX, historical epic, 40-year channel broken. We were just looking at that versus silver. So that one's good. But this is the other one I wanted to talk about. He has a 10-year yields very close to a breakout, expecting crude oil to go bonkers. I hope so. I mean, that's what I'm waiting for. I am still, I'll just put it this way. If you were to take a couple of assets and you were to throw darts at one of these assets, if any one of these assets go up, I will be sitting very well. That would include silver, platinum, gold and silver mining companies, uranium equities, and anything in oil and natural gas equities or energy service companies. Any one of those sectors just were to rip it, I'm going to be sitting pretty on any one of those. If they all rip it, which I expect them to all rip it, I'm going to be sitting very pretty for the rest of my life. Fingers crossed. So, so it says, what do you mean inflation's debt? And what he's got here is that 10-year yield again. And remember, the 10-year yield prices assets. There's a very large correlation between the 10-year yield and the price of oil. The price of oil is this dark black line here. The red and green line is that 10-year yield. And you can see the correlation. It is highly correlated. I don't know which one drives which. I think oil drives the 10-year yield at some points. And then I think the 10-year yield front runs oil at other points. Hard to say exactly who knows what and what goes where. But right now, we've got the 10-year yield going up. We have the 30-year yield breaking to the upside. Oil is starting to look pretty dang good here. We've got a breakout that we've broken out of. We've got a retest in this general location of where we're at. And now it's launch time, potentially, over the next few months. We'll be able to see it over the next few months. And that's what you're going to have to see that before everyone else. You want to position before everyone else because I think this is going to be a rapid move. Fingers crossed. But that's oil there. Oil's looking very good, and inflation is not dead. So here's also Grady. Big dog precious metals leader Franco-Nevada had a massive breakout and is now back testing. Something's got to give here. Either this chart holds up, meaning gold cannot drop very much more, or this chart breaks down with further gold downside. I'm in the camp that gold's going to rip it. I don't know the exact time frame. All these guys in their short-term calls, I don't feel very comfortable making very short-term calls, which is measured in weeks or months. I'm very comfortable in looking at the big picture view and staying long for years. It's where should I accumulate assets for the next decade plus? And that's what I really want to win at because the gains will be so big. Franco's broken to the upside here, and we're just waiting for this to launch, guys. This is a big chart. Now, this is a leader. This is the big boy in the royalty companies. If this thing starts to run, we're going to see a lot of the small guys start to run after. I've got a good breadth of investments in royalties and different sizes and all sorts of speculative and the big boys stuff. I just need a few of them to rip it. That's all I need. It becomes a statistical game. You know, did I choose one of the 5 best companies that I think are available? I just need one of them. That's all I need. Just need one to rip it. Just need 100 bagger. But Franco's broken out. It looks really good. Here's another one. I wanted to go through this tweet here, this thread. It says, Tom Corley studied multi-millionaires for 5 years. Then he wrote a best-selling book discussing what he found. 76% of the millionaires were self-made and had an average net worth of over $4 million. Here are the 10 habits that made them rich. They built multiple streams of income. The average millionaire has 7 streams of income. They have a salary, they have royalties, dividends, side hustles, capital gains, rental income, interest income. Income is speed, and the more sources you have, the faster you hit your financial goals. Me personally, I've got a salary, I have dividends, I have some side hustles, I do have capital gains, I do not have rental income, and interest income. Everybody will get that, but I do have 3-4 of those myself. The read book, so they read books. 88% of millionaires read every day to learn more about their job and industry. 85% read 2 books per month. 63% listen to audiobooks, podcasts while driving, exercising, and working. So they basically study history, self-help, and bios of the successful. I don't read. I wouldn't say I would. I don't read 2 books per month. I do read a lot, but it's probably not just books. I read more on things that I'm trying to study and look. It'd probably be self-help and stuff like that. They seek advice and encourage criticism. Millionaires are always trying to be the best version of themselves. You do this by listening to feedback on what works and what doesn't. This provides them with the information they need to succeed. They donate. 72% of millionaires donate their time 5 hours a month. It lets them surround themselves with good people. If you can't volunteer your time, you also can donate food, money, etc. They care about their health. 76% of millionaires exercise at least 30 minutes a day, 4 days a week. Their favorite exercises were biking, jogging, running. I also exercise for about an hour every other day is what I do. And I work out. I do push-ups. I do sit-ups, single Bulgarian split squats. I do all sorts of stuff. They're goal-oriented. 92% of millionaires set goals. This enables them to work on towards their dreams instead of only building someone else's, and avoid distractions from their long-term plan. You can do this by writing down 3 goals and revisiting them every 3 months. Right now, one of my goals is to increase my dividend income, where it basically can support everything I need and cover all of my expenses just off of dividend income. So that would include my mortgage, insurance on my house, my health insurance, car insurance, and property taxes, stuff like that. And I'm probably already there, and I just don't know it because I've really been dumping money into dividend-paying stocks outside of my retirement accounts. I have a lot of money in retirement accounts, and I have to start beefing up money outside of my retirement accounts. It says they're optimists. Millionaires rely on their network and relationships to find opportunities and help each other succeed. This isn't possible for cynics. Studies show that those who are the most cynical make the least amount of money. This isn't a coincidence. And I'm pretty optimistic. They save. 49% of self-made millionaires save 20% or more of their income. They're able to do this because they don't keep up with the Joneses. They have nothing to prove, so they spend less than they make and buy assets with the difference. It's exactly what I do, 100%. They choose their friends wisely. Millionaires hang out with like-minded people. People who are driven to succeed, give back, help each other. You can't get ahead when your circle of friends holds you back. 10, they love what they do. 86% of millionaires enjoy what they do for a living. 60% of millionaires pursue passion projects and dream jobs. Of those who turned their passions into business, their average net worth was over $7 million. So self-made millionaires, they build multiple streams of income. They read books. They seek advice and encourage criticism. They donate, take care of their health, are goal-oriented, are optimists, save, choose their friends wisely, and love what they do. Hopefully, everyone who's listening to this can start working on every one of these things. And if you guys need help, reach out to me. I'll try to help you with whatever I can. I'm not a personal advisor or finance type guy, but I can help you if you've got questions and give you my opinions. I am one of these people, and I do maybe not all of these things, but I do quite a bit of them. And I can tell you how I did it. That's all what I can do. Here's Josh Young. Says it's interesting to see valuations missing in this discourse. There are incredible opportunities in the publicly traded oil and gas space. They just aren't the ones touted by big banks and publications, in my assessments. So here's Bison interests, and I just want to kind of let you guys know he's got VTLE, but we've got CPE, SM Energy, STE, and Permian Resources. Interesting how we entered these at the bottom of 2020, all kind of on the right-hand side over here. Here's another one. Homeowner equity has grown rapidly the past 5 years. In fact, 67% of homeowners in the U.S. have a paid-off home or at least 50% equity in their homes. There will not be a real estate crash anytime soon, is what their opinion is. I'm trying to think of how much equity I have in my house. I probably have about 50 or 60% equity in my house is probably what I is my guess. Probably 60 or 60%, 70%, 60%. I'd say 60%. Is what I would guess. But yeah, that's what we've got for today, guys. Give me a thumb up for the content if you guys like the content. We've got some really long-term, big-looking charts that just look juicy across the board. Period. bar none. They look juicy as heck. I can name a bunch right off the top of my head. Gold to M2 money supply, gold to S&P 500, gold to oil ratio, gold to uranium ratio. Uranium looks good. Oil looks good. All of these precious metals in terms of price of dollars all look good. The alignment's there, guys. The data is there. I know a lot of people get very afraid because people are talking about a recession. What I do and what I've said, I'm sticking to it. I'm riding through it. Why am I riding through it? Because a recession may not be as bad as what people think. Maybe it is. Don't know. Maybe it doesn't come for another 5 years. No one knows that. And that's what makes investing not really difficult, but can be a little bit gut-wrenching sometimes. And you don't have to put all your money in it. I mean, it's you can put a certain amount, allocate to it, and then ride it. You don't have to be in the most risky, volatile stuff either. The retail sector, what they like to do is they really like to pile on the risk. This guy here does not do that. I do not pile on as much risk as maybe other people's perceive that I do. Remember, I've got big stakes in the physical metals, and I play that ratio game that I talk about. Made a lot of money over there, guys. It's pretty low risk. I pile into it. It's I have probably as much precious metals physical as I do in my entire equities portfolios. Now, I'm going to say it's not 100% because I did make a lot recently where it probably skewed that a bunch, but it was back a while back where my physical metal holdings were almost as big as my equities portfolios in its entirety. But now I'm going to say it's skewed because I made a bunch in oil that my equity side is probably much larger than my physical side now. I've never actually counted everything that I own. I don't know how much I own of anything. I don't know what my net worth is. I don't know. I couldn't even guess within $50,000 to $100,000 probably. I wouldn't be right. I don't add it up. It just doesn't matter. But I will keep making money. I'm going to continue to pile in, and I'll measure my dividend income here at some point, and then maybe I'm lucky enough to drop one of the jobs. We'll see. Retire, so to speak, kind of. But we'll see. We'll see where it's at. I'm going to keep stacking away, just like everyone else is doing. Keep pushing towards financial freedom to the max, and I hope everyone else can do the same alongside me. Keep stacking. Keep gathering assets when they're cheap, and then just hold on. That's my strategy. But that's what I've got for today. We'll catch you guys later. This is Finding Value.